Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Miniso Group Holding Limited annual report. Miniso Group Holding Limited offers a diverse range of businesses and services through its retail and wholesale operations. The company provides various categories of products under the Miniso brand, including home decor items, small electronics, textiles, accessories, beauty tools, toys, cosmetics, personal care products, snacks, fragrances and perfumes, and stationery and gifts. In addition to these offerings, Miniso also engages in brand licensing activities. This means that the company partners with other businesses to use its brand name or intellectual property on their own products. Furthermore, Miniso operates an online platform for selling lifestyle products, allowing customers to purchase from the comfort of their own homes. The company's product portfolio is not limited to the Miniso brand alone. It also offers a range of popular toys under the Top Toy brand, including blind boxes, toy bricks, model figures, and collectible dolls. This diversification of products allows Miniso to cater to a wide range of customer preferences and interests. Overall, Miniso Group Holding Limited's business operations encompass a broad spectrum of retail and wholesale activities, including product sales, brand licensing, and online commerce. Miniso Group Holding Limited market capitalization of $39 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Miniso Group Holding Limited holds a significant advantage in their industry. Miniso Group Holding Limited trades at a higher price-to-earnings ratio of 16 times and a lower price-to-book ratio of 0.81 times relative within the industry. This suggests a potential market detachment, as Miniso Group Holding Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.06%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for a company can be identified through various factors. In the case of this company, several key drivers have contributed to its revenue growth. One major driver is the expansion of Miniso stores in the Chinese mainland, which has led to an increase in total GMV and sales volume of SKUs by 16.3% and 10.8%, respectively. Additionally, the number of distributors has increased, contributing to a plus 30% growth. The company's store network has also been expanded and upgraded, while new product offerings with aesthetically refined designs have been introduced. Another significant driver is the increase in revenue from Miniso brand in both the Chinese mainland and overseas markets, with growth rates of 16.8% and 29.3%, respectively. Furthermore, the company's directly operated stores have seen a substantial increase in revenue by 71.3%. The purchase of wealth management products has also contributed to revenue growth. In terms of regional growth, the Chinese mainland has seen a plus 22% growth rate, while other regions such as North America and Europe have experienced significant growth rates of plus 68.3% and plus 69.9%, respectively. Additionally, sales of lifestyle and pop toy products have increased by 72%, product sales to franchisees have risen by 12%, and online sales have grown by 50%. Overall, these factors have contributed to the company's revenue growth, with a focus on expansion in key markets, introduction of new products, and strategic investments. The net income of the company experienced a significant decline from RMB 2,635,400 428 in 2024 to RMB 1,209,814 in 2025. This decrease can be attributed to several factors, including a drop in finance income, an increase in finance costs, and a reduction in share of profit/loss of equity-accounted investees. The company's profit margins also underwent a change, with gross profit margin decreasing from 45% to 45.2%, operating profit margin declining from 19.6% to 15.5%, and profit before taxation margin dropping from 19.7% to 8.9%. Despite the increase in revenue due to the growth of Miniso brand in Chinese mainland and overseas markets, the company's cost of sales and selling and distribution expenses also rose, contributing to the decline in profit margins. The decrease in net income and profit margins can be seen as a result of the increased costs associated with the expansion of the business. While revenue has grown, the company is struggling to maintain its profitability due to rising costs. This trend suggests that the company needs to reassess its cost structure and explore ways to improve efficiency in order to sustain its growth. The company's financial performance indicates a positive trend in operating cash flow. According to the provided data, the net cash from operating activities has shown an increase over the past 2 fiscal years. In the fiscal year ended December 31, 2025, the company generated RMB 577.9 million in operating cash flow, which is a significant improvement from the previous year's RMB 168.3 million. This upward trend suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. The increase in operating cash flow indicates a strong foundation for future growth and stability, making it likely that the company will continue to generate positive operating cash flow. The company's debt level has undergone significant changes over the past year. Initially, there was a notable increase in total debt from RMB 7,764,606 in 2024 to RMB 17,914,251 in 2025. However, this is not entirely representative of the overall trend, as another report indicates that total debt decreased due to a one-time adjustment. Despite fluctuations, interest expenses have increased substantially. In 2024, interest expenses were $0, but by 2025, they had risen to $703,524. This significant increase is also reflected in net interest expenses, which jumped from $92,915 to $430,930. A breakdown of interest expenses reveals that the majority of this increase can be attributed to equity-linked securities, with a rise from $0 to $384,684. The company's debt level and interest expenses have undergone significant changes over the past year. While there are some discrepancies in reports, it is clear that interest expenses have increased substantially, driven primarily by equity-linked securities. The performance of Miniso's segments and regions varied significantly in the recent period. In the Chinese mainland, the company experienced high-quality growth with a revenue increase of 22%. This growth was also reflected in the segment's revenue, which reached $14,405,092, and operating profit, which stood at $1,919,684. In contrast, some regions struggled to keep pace with this growth. Asia excluding China saw a decline of 8% in revenue, while Latin America experienced a similar decrease. These regions failed to capitalize on the company's globalization strategy and optimization efforts. However, other regions performed exceptionally well. North America recorded a remarkable increase of 69% in revenue, making it one of the standout performers. Europe also saw significant growth, with a 70% rise in revenue. The other segment, which includes various international markets, achieved an impressive 77% increase in revenue. Overall, Miniso's performance highlights both the opportunities and challenges that come with globalization. While some regions struggled to adapt, others seized the initiative, driving growth and profitability for the company. Management is expressing optimism about the company's future prospects, particularly in strategic overseas markets. To achieve this growth, they are investing in directly operated stores to drive success. The raised funds will be allocated towards expanding the overseas store network, optimizing supply chains, building the brand, and providing additional working capital. The management team believes that their investment strategy is aligned with the group's goals, citing the development of the offline retail industry in China as a key driver of growth. They are also focused on diversifying revenue streams through online sales and partnerships with e-commerce platforms. This multi-channel approach aims to drive business expansion and increase profitability. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. Notably, the company paid dividends in both 2024 and 2025, with amounts totaling $90,635,000 and $101,292,000 respectively. Additionally, the company repurchased shares in these same years, purchasing a total of 13,773,180 shares. These actions demonstrate the company's commitment to returning value to its shareholders through various means. By paying dividends and buying back shares, the company is able to distribute wealth directly to its owners, while also reducing the number of outstanding shares on the market. This can have a positive impact on the company's stock price and overall financial health. Concerns about inventory buildup and supply chain disruption have been raised due to the significant increase in costs associated with holding inventory. According to recent data, the cost of inventories has risen by a substantial 25.7%. This surge in inventory costs is not an isolated issue, as logistics expenses have also seen a notable increase of 10.8%. These rising costs are indicative of potential supply chain disruptions and inventory buildup issues. As companies struggle to manage their inventory levels, they may be forced to reevaluate their supply chain strategies to mitigate these risks. The impact of such disruptions can be far-reaching, affecting not only the company's bottom line, but also its ability to meet customer demands in a timely manner. That concludes the financial summary for Miniso Group Holding Limited. Feel free to comment below, and I will be happy to answer them when possible.